Joining us right now is former Atlanta Fed President Dennis Lockhart, now a professor at Georgia Tech. It's great to see you this morning. And I just lay it out there. What do you think the Fed is going to do come September, if not before?
I doubt they're going to do anything before, but I think it's probably very probable. It's very probable that they will move in September. There's more data to come between now and the meeting, and who knows, we could see confusing data coming in situations that are iffy. Often the leadership of the chair really matters. So I'd be watching the Jackson Hole speech to see if there's any indication of which direction Jay Powell's leaning.
And how aggressive do you think he will actually be in September?
I think the preferred mode is 25 basis points. That's really the default mode of the Fed. 50 basis points is not completely off the table. I think there's some chance of that, but that would imply catch up that I don't believe the committee thinks they're having to do at the moment. So, my best guess at this time, subject to the data coming in that are consistent of what we've seen, is a 25 basis point move in September.
And how do you think about the rest of the year, calendar year that is, and maybe even into 25? The reason I ask is we had somebody on earlier from Neuberger Berman who suggested that he thought it is possible the Fed, maybe they don't cut aggressively 50 basis points in September, but that there's going to be more cuts on the table over the coming 6 months than maybe the market's anticipating right now.
Well, you always have to kind of frame this as what are the data going to tell the committee about the evolution of the economy? So if you have a crystal ball that can look to December, then maybe you can make some prediction as to how the cuts will unfold. The default mode is 25 basis points a meeting. I wouldn't totally rule out that they decide to go every other meeting, but at the moment, it looks like the weakening is strong enough weakening that they would go 25 basis points in November and December. And
when you look, I don't know if you got a chance to hear Austin Goolsbee on the show yesterday. He said, if the numbers are the numbers, we will react. How behind do you think the Fed has been? Have they been too reactive?
Well, they're dealing with an economy that I think has been characterized correctly as somewhat unique coming out of the COVID period with unusual combinations of data, for example, rising unemployment at the same time with healthy job creation up until at least last Friday. So, I think they are by necessity in a little bit more of a reactive mode because there are surprises that come through. Having said that, they're trying to stay very steady, I think, and deliberate and sober about this. So that's another reason why I think the default mode of 25 basis points is probably what they'll do in September.
And then I wanted to ask you, I don't know if you saw, there was a story about a research report that Nouriel Roubini and another professor had put together suggesting that they believe that the Treasury Department was effectively trying to manipulate the Treasury market in a way that only they could because they thought the Fed wasn't doing. They were almost acting against the Fed's interest. Did you see that? And I was curious if you had a view about it.
I didn't see the article. I hesitate to comment at all because I don't know the gist of the argument.
Fair enough. I thought I'd try. Dennis, it is always great to talk to you, especially given these moments. One last piece. When you think about what's this sort of carry trade coming undone in Japan, how much should we be focused on what's happening in Europe with interest rates, what's happening in Japan with interest rates, and how much does that ultimately even get thought about in the room when Jay Powell is going to have to make the ultimate decision in September?
Well, in my experience over 10 years at the Fed, the great majority of comments are about the domestic economy. And the international influences on the U.S. domestic economy are mentioned. There are reports on them and so forth, but we tended not to dwell on that because the U.S. economy is such a mammoth engine in and of itself that sometimes these foreign influences just are secondary. They're minor compared to what's going on with the consumer in the U.S. I think we have to keep an eye on the wiring of the global financial system, and we saw a little bit of evidence yesterday with Japan unwinding some of their carry trade positions. Yep. It can have an influence on markets, and markets can have an influence on the domestic economy. But again, from my experience, it's reported but not necessarily discussed very thoroughly.